our top business story, Opec said on Wednesday that demand slowed last month as its members' output grew, including record output from leading producer Saudi Arabia. The group, in its monthly reports, stated that product markets in the Atlantic Basin weakened during July, despite petrol demand hitting record levels in the U.S. during the peak of the driving season. It added that the sentiment was fueled by high petrol inventories and slowing demand of diesel. OPEC production, meanwhile, increased last month by 46,000 barrels per day to average 33.11 million barrels per day, with Saudi Arabia's output hitting a record 10.67 million barrels per day, up 123,000 barrels per day from June. The OPEC total takes into account output declines in 7 countries. The UAE also hit a record production of 3.18 million barrels per day, up 13,000 barrels per day on the month. It averaged 3.03 million barrels per day over the second quarter, up 75,000 barrels per day from the first quarter. Iran also registered a big increase as it continued to rehabilitate its industry after nuclear-related sanctions limiting exports were lifted this year. Iran's output last month exceeded 3.6 million barrels per day, about 500,000 barrels per day above its first quarter average. Saudi Arabia will ease restrictions on foreign investment in its securities markets next month, much sooner than previously indicated, in an effort to attract more institutional money into its bourse, the regulator said on Wednesday. The stock market opened to direct investment by foreign institutions in June last year, but all types of foreign investors still own only about 1.03% of the $390 billion US market. In May, the Capital Market Authority announced it would ease ownership limits and minimum qualifications for overseas institutions by mid-2017. In a statement on Wednesday, it said the reforms would take effect on September 4th. Among the reforms, each asset manager will only need to have a minimum of $1 billion of assets under management globally to qualify as a foreign institutional investor in Saudi Arabia, instead of the current minimum of $5 billion. Each foreign institutional investor will be allowed to own directly a stake of just under 10% of a single listed company, up from the current ceiling of 5%. Other restrictions will be scrapped, including a ceiling of 10% on combined ownership by foreign institutions of the market's entire capitalization. All foreign investors combined will still be limited to owning 49% of any single group. Average residential rental and sales rates continued to decline across Dubai during the second quarter of 2016, but performances are highly fragmented by location, according to CBRE. Its Q2 2016 Dubai Market View said the devaluation of major currencies against the US dollar, spurred by global economic uncertainty, has impacted investor sentiment in the Emirates real estate market. The report said Dubai's residential prices fell for the 6th consecutive quarter during Q2, with average sales rates falling by 2% quarter-on-quarter, resulting in a 12% decline year-on-year. It added that higher-end residences witnessed the most significant drops during this time. According to the Dubai Market View, prices within the mid-market segment have proven to be far more resilient to this downward rate trend, reflecting the current demand for affordable accommodation in freehold communities. According to CBRE, rates have been predicted to drop further by an additional 3 to 5% in the coming quarters, although some locations may vary. During Q2, average residential rental rates declined by around 1 to 2% year-on-year. Sharjah registered a 7% increase in hotel revenues, reaching 378 million dirhams during the first 6 months of 2016, according to the latest figures from Sharjah Commerce and Tourism Development Authority. The authority has been targeting markets identified in its strategic marketing plan and says that H1 2016 hotel statistics show a 19% increase from those markets compared with H1 2015. The SCTDA announced its Sharjah Tourism Vision 2021 tourism development strategy in 2015, which aims to attract more than 10 million tourists to the emirate by the year 2021. A total of 878,006 visitors booked accommodation in Sharjah during the first half, compared with about 1 million visitors registered during the first half of 2015. Sharjah guests stayed a total number of 1.99 million hotel nights from 1st January to 30th June 2016. China is now Sharjah's fastest growing tourism market, with the authority recently stepping up marketing efforts in China, opening up a representative office, recruiting Chinese staff, and adding a Chinese language website to Sharjah's tourism portal. The Emirates saw a 78% increase in Chinese visitors during 2015, and this year has seen a 73.2% increase in Chinese tourist numbers during the first 6 months. Overall, the largest numbers of visitors during the first 6 months of this year came from the GCC, which accounted for nearly 220,000 hotel guests, or about 25% of the total. Asia provided the second largest source of tourists, showing a 12% increase compared to H1 2015. Meanwhile, 180,768 registered Sharjah hotel guests came from Europe, accounting for about 21% of the total.